All right. A big weakness of everybody here in the highlight of the day is transitional moments when you could be bullish and wrong, but it's no big deal because you could transition out of that. When you can be bearish and wrong, but you could transition out of it. This morning, we had a move that was going to be strong, meaning we were up a lot. And then it just does this. It creates a distinguished box or consolidation or fight, we call it. The bulls lose right there as it moves through the 94 area. All right. You could be fighting for your location in a long trade and not really showing any results. You don't want to hang on to it and then, have one maybe shot at the title to find this upside. But the bulls give way, and all of a sudden it has a pretty quick rejection off of these 90s or this 90 area. You'll see this in a lot of markets. It doesn't mean you could make your bearish to bullish transition there. Some could, if you could find other things that we have that are not hidden to us, like longs finally saying uncle down there. It was, I think, on the dead low. There were a ton of longs that said, I'm out. And that's what you want for the upside to happen. But even if you didn't see that and make that determination at around 90 even, you take the box that you were finding to be helpful as to who was winning and who was losing. And you could see that through the middle of it, and it was actually, if we do this right, through the middle of it, and this isn't arbitrary, once it gets through there, the market grabs a bid and gets stronger. It's not exactly through there because it comes back through, but once it gets through the top or the middle of this previous box, it generally has a great chance at attacking the top of it. And what I was able to say right in that area was there seems to be a lot of selling rather, that has probably been eliminated up here. There's always selling above and buying below, but there's probably enough of sellers that have been pulled because the longs got pushed off the boat. Those that were selling pull their sell orders maybe above, so it clears the path. Again, this is a head fake that isn't as easy to read because it takes a little time. Dips lower, comes back through the middle, and then continues up. And then we had a 9 o'clock number that was a big number, second biggest number of the month. It's a national look at manufacturing in this country. And not only did it miss, but it missed and at a 2+ year high. All right. Number one, it was a big number. ISM comes out the first business day of the month. It was supposed to be, I think, 56.0 was the exact estimate. Came in at 59.3, I want to say. It was a bigger than average miss. All those things kicked us up from 07 and our next leg higher. All right. But transitional moments are important, and you got to use them with the thought of not just a pattern. Yeah, they create a pattern, but also real-time understanding of why markets transition. They transition in this case from bearish back to bullish because the people who are holding on to a bullish trade or a long trade finally say screw it and they're out. When enough longs say screw it and they're out, that pulls a lot of sell orders above and it makes the path to the upside a little easier to go. It's an important principle, and maybe the most important that you'll ever learn or hear, and should be the first thing people learn when they get into this business. Oftentimes, it's one of the last things that they learn. Either way, we'll see everybody tomorrow at the next highlight. Close to 1,000 YouTube subscribers, so subscribe.